let's turn our attention now to the municipal bond market, an area of the market that we don't often talk about. And we're joined now by Peter Hayes. He's the head of BlackRock's Municipal Bond Group. And Peter, as I mentioned, not an area that we look at super closely here on this program. If you could just maybe outline for us to start what the last 3-4 months have looked like in the municipal space with everything that's been going on.
Sure. Yeah. Thanks for having me. Good afternoon. I would say interesting would probably be an understatement. Obviously, with the economic shutdown that nobody saw coming, it's impacted every sector of the market. I think a lot of people think about municipal bonds as being just states and cities, perhaps schools, but I mean, there's sectors that one might not think about: toll roads and water and sewer and airports and charter schools and mass transit and on and on and on. So you think about the U.S. economy shutting down, it obviously has impacted every sector. So we had a very good tailwind coming into the sell-off, the crisis. The market was doing quite well, good demand, low supply, and then we had this enormous sell-off, and we just even greater and more severe than we saw in the financial crisis. The odd part about it is we've had a very significant snapback. It's almost like the market has healed itself to some degree, yet a lot of those credit concerns still have not been alleviated just because of the uncertainty around how long this economic shutdown is going to last. Even reopening, if we reopen at 25 or 50% capacity, it means that revenues will be down for a period of time. So even though the market feels healthy from a return standpoint, still plenty of uncertainty left.
And, as you mentioned, so there's a lot of different stacks to the muni market. Maybe if we just look at, states and cities, which I think some people might be more familiar with, obviously, if there's less sales tax revenue coming in, that puts the financial picture under pressure. I heard a lot of governors talk about stuff like that. From your vantage point, what are maybe the most immediate challenges facing issuers? And I guess what are investors expecting to see kind of over the next 6 months as some municipalities are forced to come to market?
That's actually a very good way to frame the question, because it is over the next 6 months. It's around liquidity. How do these states and cities continue to pay their bills, provide services for the citizens? And while in the meantime, revenues are down significantly. We've seen California came out the other day and they've revised down their budget. We're seeing deficits that are from $1 billion to several billion estimates across a wide swath of states. So the hole is actually very big. And as a result, it's really a little bit more of a liquidity crisis. How do they bridge themselves over until the economy begins to normalize and get back to pre-COVID levels? In the meantime, providing the same level of services. We've seen California threaten severe budget cuts by July 1st if they can't enact the budget. So there's a lot of uncertainty over the next 6 months, which will take place. But investors should think about it that way, as opposed to a long-term solvency issue. States, cities, unlike corporations, they can't cease to exist. They have to continue to provide these services. They can't just sell their assets and go away. So they'll find ways. They can raise taxes, they can cut their budget, they can hope for a big jump start in the economy. There's a number of different things that'll take place. But the long-term ability to pay their debt within most of these sectors, but particularly states and cities, is absolutely fine. It's how do they bridge themselves over the next, say, 6 to 9 months.
So it sounds to me, if we go back to the last kind of crisis moment for the financial markets and obviously municipalities, beginning of the last decade, 2010, 11 in there, it sounds like you're outlining quite a different problem facing the market or the issuers, I guess, right now than we saw maybe 10 years ago.
It really is. And part of it is going to be dependent upon the length of this recession. How quickly can we snap out of it? Is the stimulus that Congress is providing, is the activity of the Fed enough to create economic momentum and get us out of this quickly? Or is this going to drag on? In the 2008, 2009, coming out of that, it was very much a financial crisis. It had a lot to do with a big downturn in housing, et cetera, over leverage, all those things. It's a little different scenario this time. That's why we make the distinction that it is a difference between kind of liquidity and then long-term solvency. So there are definite differences, but it's going to depend. I'm sure you've talked about it. Is it a V-shaped recovery? Is it a Nike swoosh? Is it L-shaped?
Yeah.
What's it going to look like? I don't think we know the answer to that until well into the fall, and we see if there is a resurgence or a second wave, and we see if there's a second stimulus package, et cetera. So between here and there's a fair amount of question marks that need to be answered.
And before I let you go, I want to ask about obviously the Fed's Muni facility and how that has changed or not changed dynamics in the market. And from your vantage point, how you see the actions that the Fed has outlined helping or not helping as intended yet, and what the state of play is there.
It's pretty interesting. So this municipal liquidity facility is designed to do exactly what I talked about, basically provide bridge financing to states and cities so they can help themselves over this big revenue shortfall and continue to provide services. It's a great backstop. So far, only the state of Illinois has used it, but they haven't done any direct purchasing of municipal bonds. They've done that. We've now seen that most recently in corporate bonds and mortgage-backed securities and treasuries. So they've added tremendous lift to those markets. The municipal market, in essence, has healed itself, which is another story and been really interesting. So in some ways, buying those other securities have helped because people are looking to municipal for value. They offer good quality, they offer good yield. And that's, I think, why we're seeing a fair amount of demand. So it's been an indirect help as opposed to the direct help that some of the other Fed balance sheet buying has created.
All right, Peter Hayes, the head of BlackRock's Municipal Bond Group. Thanks so much for joining the program. Hopefully we can talk soon.
Awesome. Thank you very much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.